Welcome to this month's rate update video. And in this video, we're going to cover everything you need to know about interest rates today, how they affect your down payment and your monthly payment. And we're going to calculate that based on 6 of the most popular areas in Southern Arizona. And if you stick around to the end, I'm going to share an important reminder with you, so you're not going to want to miss that. We're going to jump into this video right now. Hey, I'm Rich, and if this is your first time to the channel and you want to know everything there is to know about lifestyle, real estate, and new builds in Southern Arizona, then you've come to the right place. Make sure you hit the subscribe button and tap the little bell notification so you can be the very first to learn everything you want to know about lifestyle, real estate, and new builds in Tucson, Arizona, and surrounding areas. Having helped over 2,000 people buy or sell a home, we get calls and texts every single day from people just like you who are looking to make a move in Tucson. So whether you're moving in 1 week or 1 year, call, text, email, or even schedule a free Zoom consultation. We'd love to help make your move smooth anywhere in Tucson or one of the surrounding areas. So let's dive into this video. The first thing that I kind of wanted to talk about as it relates to interest rates is not all interest rates that you see advertised are actually the interest rate that you're gonna get. I just wanted to talk a little bit about what impacts interest rates the most, and ultimately setting you up for success, knowing what you can expect when you finally call a lender and get an actual breakdown of what your rate is going to be. The first thing that I want to talk about is the property type. The property type can actually dictate what type of interest rate you get. So whether it's a single family home, whether it's a manufactured home, condo, all of those different property types can play a role in the interest rate that you get. The next thing is your FICO score. That's one of the most important credit scores that they look at, that the lenders look at and evaluate based on what type of interest rate they're going to give you. So that's another really important one to make sure that you consider. Debt ratios is another really important thing that can influence and impact the interest rate that you ultimately get on your mortgage. The debt ratio is just simply the comparison between what debt you have and how much that costs every month versus how much income you have. They compare those two, come up with a ratio, and they plug that in, partly determine what type of interest rate you're going to qualify for. The next item that really impacts your interest rate is going to be whether you plan on living in the house or not. So keep in mind, from the bank's perspective, they're willing to give the best rates to the lowest risk. And from a bank's perspective, if you're living there, like if it's your primary house and it's where you live and reside full time, that's the lowest risk to them. So typically they're going to be willing to give the best interest rates to people that are buying a home to owner occupy versus buying a home which would be considered non-owner occupied, more like an investment home. You're buying it as a part-time home. Maybe even you never plan on living there at all. It's just straight investment property. That the bank is going to look at as a little bit more of a higher risk. That means your interest rate's probably going to come up a little bit. Things like the size of the loan can also have a big impact on the interest rate that you get. So believe it or not, the lower that the loan amount is, the better interest rates tend to be. Again, think about it from the perspective of the banks are willing to loan money based on risk. So the less amount of money that you're willing or that they're lending you, the lower the risk to them. The higher the amount of money that they're loaning you, the higher the risk. So tends to be that the best interest rates are going to be given the lower that you get. A $200,000 mortgage, for instance, versus a $500,000 mortgage. Typically, if all of these other things are the same, the lower loan amount is probably going to have a little bit of a favorable interest rate versus something that's higher. Down payment's another big one. Depending on how much money you have to put down on your loan, that's going to be another indicator of interest rate. So again, from the bank's perspective, it's riskier if you have very little down, typically. So the higher your down payment, typically the lower your interest rate. And the last thing that I just wanted to mention is down payment assistance programs, whether that's first-time home buyer programs, state funded programs that help buyers in the marketplace. those typically are going to have a big influence on ultimately what your interest rate is. It's generally regarded, like in my experience, what I've seen is anything with a down payment assistance, they call it DPA. Anything that has DPA associated with it, that's typically going to be your highest interest rate that you're going to get. And again, it's because it's all built into the loan. If you need money, if you need down payment assistance, it means that the bank is now having to give you more money and assume more risk. So therefore, the interest rate's going to be a little bit higher. I wanted to just cover some of those things so everyone watching this video, we're all kind of educated on these are the factors that most highly influence what interest rate you get. That way you know that what you see advertised online, or you hear some lender, or you see some billboard or something like that broadcasting an interest rate, it's usually a best case scenario, and none of these factors that we just discussed are really taken into account, but in the realm of possibility, that could be an interest rate that you get. I'm going to talk about 3 different loan types, which are typically the most predominant loan types: VA, FHA, and conventional. For VA and FHA, those tend to be very similar in interest rate. Those interest rates right now are about 6.99 on a 30-year fixed mortgage. Now, of course, based on the information that we just discussed before this, that could be lower, it could be higher, but that's kind of the median point of where rates are today. The third is the conventional. Now, conventional is a little bit higher. It's at 7.25. Of course, that can change based on the factors we discussed. It could be a little bit lower. It could be certainly be a little bit higher. It all depends on a lot of the criteria that we discussed before. But that is kind of the median point of the interest rate for a conventional loan. So VA at 6.99%, FHA at 6.99%, and conventional at 7.25%. Something else that's worth noting is each of these loan types has a little bit of a different down payment structure. So those of you that might be more familiar, the VA loan is 6.99% with 0 down payment. Now that's because if you're a vet, that's a special loan program to honor our veterans, and they supply that at a 0 down. Now you can put money down on a VA loan if you want. But again, if you were to put more money down on a VA loan, you might get better interest rate pricing, but it's certainly not required. So this would be based on the 6.99% would be based on a 0% down. The conventional loan at 7.25, that's based on a 5% down. Now, you can certainly put more down. There is right now an option for you to put 3% down, so you can put less than 5% down. But the 7.25 that I'm stating now is based on a 5% down option. The final one is FHA. FHA typically is 3.5%, so 3.5% down at that 6.99% interest rate. So there you have the 3 loan types, kind of the median of what the interest rates are for all 3 based on the down payments associated with each as well. So cool. Now we're kind of dialed in on where interest rates are today and ultimately what factors play into that interest rate that you ultimately get. Now let's talk a little bit about different areas of town. There's 6 areas of Tucson and surrounding areas that are the most popular that I just kind of want to do some spot checks based on that information that we just discussed. Let's take some scenarios if you were to buy in some of these areas. The first one, let's look in Oro Valley. Oro Valley is in the northwestern part of Tucson. Beautiful views of the Catalina Mountains, a lot of higher end properties there. The average price point in Oro Valley as of today is about $500,000. Now, if you were to equate that to what that means based on these 3 loan types that we just went over, for a conventional loan, you're looking at a down payment at 5% of $25,000. So $25,000 down, your monthly payment's gonna be $3,948 a month. Now that's for a conventional loan. That's also gonna include an estimate for your mortgage insurance, because keep in mind, anything less than 20% down, typically you're going to have some sort of mortgage insurance. So that goes for FHA, conventional. The exception to that rule is, of course, VA. There is no mortgage insurance on a VA loan at any down payment. You don't have to put any money down for a VA loan. And even if you put 0% down on a VA, you have no mortgage insurance. So let's look at VA real quick. 0 down for an average home priced at $500,000 in Oro Valley. Your monthly payment was 0% down based on today's interest rates are going to be about $3,840 a month. Let's take a look and compare that to FHA. Now, FHA does have some limitations, and that changes too, like the loan amount that they'll lend has some limitations. Right now, their limitation for the loan is a little bit below $500,000. So I added the difference. It's like $498,000 and some change. So that difference of about $1,200, $1,300, I added that to the down payment. So if you were to buy a $500,000 house in Oro Valley, your down payment would be approximately $19,000 for FHA, and your monthly payment would be $3,900 and about $50 a month. So let's look at Marana. Marana encompasses a large part of the deeper northwest part of Tucson, or extended past Tucson and northwest of Tucson. Marana has areas like Dove Mountain, Gladden Farms, Red Rock. So a big draw to Marana. And based on the average price point in Marana right now, it's $425,000. So how does that break down on a conventional loan? For conventional at 5% down, you'd be putting down $21,000 approximately, and your monthly payment would be about $3,200 a month. It does include an estimate for mortgage insurance. So about $3,300 a month with mortgage insurance on a conventional loan. For VA, remember, 0% down for VA, and based on 0% down and an average price of $425,000, your monthly payment for VA would be about $3,300 a month. For FHA, your down payment would be about $14,800, and your monthly payment then would be about $3,340 a month. And again, that does take into account a mortgage insurance payment. Let's take a look at Tucson. So Tucson average price point's one of the lowest. $359,900 is the average as of June of 2024. On a conventional loan, about $18,000 down at 5%, and your monthly payment's gonna be about just under $2,800 a month. For VA, 0% down, and your monthly payment would be about $2,800 a month as well. For FHA, you're gonna need to bring about $12,600 down, and your monthly payment's gonna be just above $2,800 a month, including an estimate for mortgage insurance. Moving a little bit further south now, taking a look in Sahuarita, that includes Rancho Sahuarita, which is a huge master plan community with lakes, walking paths, really cool spot out there. So Sahuarita, Rancho Sahuarita, and their average price point out there is $344,900. So a lot of bang for your buck in Sahuarita. Based on today's rates, 5% down on a conventional loan is going to be about $17,000 down, and your monthly payment is going to be about $2,666 a month. A lot of bang for your buck in Sahuarita. VA loan, 0% down, you're going to have about a $2,700 monthly payment with VA. FHA, your monthly payment, again, 3.5% down on FHA. Your down payment's going to be $12,000, just slightly above $12,000 down. And your monthly payment's going to be right at $2,700 a month, including that mortgage insurance. Moving a little bit further to the east of Sahuarita now, we're going to talk about an area called Vail. Very popular, lot of new construction, a lot of new amenities, restaurants, conveniences like grocery stores, gas stations, fast food have moved into Vail in the last 5 to 10 years. They have some of the most spectacular views in Vail as well. So if you're considering areas around Tucson, definitely put that on your list. Price point on Vail, still pretty competitive, $414,000 on average. Conventional loan, 5% down. Your monthly payment's gonna be a little over $20,000, so right around $21,000 down. And your monthly payment is gonna be about $3,200 a month. Now, VA, your VA loan, 0% down once again, and it's gonna be about just under $3,200 a month. And remember, with VA, there's no mortgage insurance. So this is kept pretty competitive for VA just because you're not paying that additional mortgage insurance rate, which, you know, based on these numbers we've discussed, are somewhere between $150 to $300 a month. FHA in Vail, about $14,500 down. $14,500 is a 3.5% down payment, and your monthly payment on that would be about $3,300 a month. So not bad. Last area, we're gonna move further south of Tucson, about 30 to 40 minutes, to an area called Green Valley. Predominantly a retirement community. They have big master plan communities out there that really serve anybody who's a retiree, 55 and up. A lot of age restricted communities out there. Again, one of the most popular destinations here in Southern Arizona. And so based on these three loan types, a conventional loan out there is going to be $15,250 down. So a little bit over $15,000 down, making your monthly payment about $2,400 a month for conventional. VA, 0% down, once again, about $2,300 a month for VA. Now FHA, 3.5% down. Your down payment's going to be about $10,700. And your monthly payment should be about $2,400 a month. So there you have it. We've covered 6 of the most common areas in Southern Arizona. I've broken it down for monthly payment, the 3 loan types that are most predominant, as well as the down payments necessary to get those monthly payments. The last thing that I wanted to talk about is just kind of teeing up what's next in the climate of interest rates. Some of the biggest things that we're paying attention to is inflation. Inflation has a direct correlation to interest rates. And so if inflation is curbed between now and say September, we most likely will see some pretty good relief in interest rates. Now, that's all relative. Pretty good is very relative. What I mean by that is most of the people that are educated on this are indicating that we're probably going to see, if inflation is curbed between now and September, we might see 0.25% relief. So we might see the interest rate drop, the federal rate drop another 0.25%. Now, there could be another drop of, say, another 0.25% in the final quarter 4 of this year, from September to December, if inflation continues to head the right direction. Now, one thing to pay attention to is that, because I think that this is misunderstood a lot. Certainly I misunderstood this, before I started my real estate career. But when the federal rate drops, it's not a dollar for dollar. It's not an exact percentage rate that we see reflected as consumers. So if we see that rates have dropped 0.25%, we're not going to see the interest rate that we get drop 0.25%. Typically, we're going to see it drop. But essentially what that means is that that's the federal government rate that they're lending money at. So they've dropped the rate at which they're lending their money to Chase, Wells Fargo, the big banks. Now, the big banks then have a choice. How much do they want to pass that savings on to us as the consumer? And I'm just explaining that so we're all on the same page of, hey, if I see the Fed drops the rate 0.5%, that means I should get a 0.5% rate drop. Well, typically that's not the case. You'll see probably a portion of that, but it's probably not going to be the full 0.5%. So just to recap on that, we've got as long as inflation is curbed over the next couple months and through the end of the year, we're proposed to get maybe another 0.5% of relief on interest rates. Now, take that with a grain of salt. Interest rates are inherently difficult to pin down because it is an open market and there's a whole lot of factors that influence it. Take the beginning of this year, for instance. Coming into an election year, we were really, really poised, us in the real estate world. What we've seen historically is some reliefs in rates. We didn't really see that too much. So it's kind of an odd year because that's not normal. That's not as normal as it's been some of the past election years that we've seen. So just take that with a grain of salt. This is what's proposed, and what's indicated is changing constantly. So you can plug into these videos month by month to hear an update on exactly what has been changed in the market, what's coming, and what to anticipate for your planning. The other thing that's really important to pay attention to as it relates to interest rates is unemployment. So if unemployment goes up, inflation tends to go down. We kind of see that inverse relationship between the two. Both of those are kind of things that we're really paying attention to. The other thing that is kind of a variable is any type of war that we might get involved with. Historically, looking at interest rates during wartime, anytime there is a conflict or a war that the US is involved in, typically what we're going to see is some relief in interest rates. The government is doing their best to try to keep the economy moving, keep money changing hands, keep everybody kind of moving forward and exchanging funds. So they may typically, they'll keep those interest rates a little bit lower, maybe even give some relief to interest rates if we were to enter into some sort of a conflict. And that could be something, as far as an interest rate's concerned, that could be something that poses some relief to interest rates over the next 6 to 12 months. All right, there you go. So now you know everything there is to know about interest rates in today's market. If I missed anything or you have some questions about this video, feel free to drop that in the comments and I'll be sure to respond as quickly as I can. And if you like this video, please make sure you hit that like button and maybe even share this with a friend that you think might enjoy it. As always, I like to end these videos with a little bit of inspiration. So here you go. Here's a quote from Gary Keller, who I heard it from the first time. This was several years ago. He's the CEO of Keller Williams, and I was with that brokerage for about 7 years. First time I heard him say this, definitely made me think, kind of sat me back in my chair and was just kind of thinking like, wow, this is, there's a lot of wisdom in this quote, so I wanted to share it. Self-image is a choice, happiness is a habit, self-confidence is learned, and relationships are simple. So hopefully that hit someone, take some value from that like I did. And remember, whether you're moving in 1 week or 1 year, call, text, email, schedule a free Zoom consult. I'd love to meet you and help make your move smooth anywhere in Tucson or Southern Arizona. And until next time, I hope to see you around the neighborhood.